Good morning, guys. How are we all doing? So Dan from Trading with Dan here. This is our Bitcoin morning update. So if you guys wouldn't mind smashing that like button, and we shall go quickly over to those Bitcoin 4-hour charts. So yeah, quick video this morning. Not too much to talk about here. You can see that we are still basically price action is wrestling with this mid zone, this support zone. This $36,000 to $35,000 support zone. Obviously weekend price action I pretty much expect sideways, and then we are going to wait to take a cue from traditional markets, the futures of which will be opening this evening. So yeah, potentially get some direction there. Obviously we're not looking very good here. I would guess if we are going to turn it around and start to make our way back up, we may get a wick down and a test into 33,000 first to get a little bit of a liquidity hunt, potentially a little bit of a bear trap before squeezing back up. If upwards is to be the path, I believe that's how we'll do it. But there is no reason why we can't just come down, stay down, and start to basically trade around this 33,000, and then we'll look to take that out and come and test the bottom of the wider range. So just come from the bottom to the top and all the way back down to the bottom again. So yeah, we'll have to see what happens. Obviously markets are having a minor taper tantrum, because the Fed is talking about basically at some point it may talk about basically tapering all the QE and craziness that is going on, and has admitted that there is potentially a bubble in the housing market. So that is basically telegraphing the fact that they may be looking to reduce the amount of mortgage-backed securities that they buy. So basically that will be dialing back in some of the quantitative easing they're doing. So yeah, but the main thing is that if the Fed is gonna start admitting that there's bubbles out there, they're basically everywhere. So where would that end? There is a bubble in the stock market, there's a bubble in the bond market, there is pretty much probably a bubble in these crypto markets as well, all proliferated from basically just the massive wave of cash, of money that is basically in the system that they are basically they've basically caused. So yeah, that is, so there are basically things coming from the Fed that are legitimately giving the market the jitters. So yeah, that could feed through into everything. I mean, at the end of the day, we are in a Ludwig von Mises Austrian school economics crack up boom, and there is no getting off, there is no tapering this, there is no we're basically going to have to keep going up until we don't, and then everything collapses and the everything bubble will collapse. There is no trying to stabilize things. There is also Basel III, which is basically coming into effect at the end of this month, for the capital ratios that for gold, basically up to 85%. And people think, oh, this is great, gold banks are going to start holding gold. Basically, they're more likely not going to be because of the increased basically capital that they'll have to tie up doing that. So yeah, what we're going to probably end up with is more volatility in gold markets as basically the bullion banks, which are pretty much all have vacated this market now anyway, are just going to stop basically operating in that arena. And yeah, so what we may actually happen though is may actually have prices in gold that does more reflects the underlying actual real demand and prices, but obviously with wider spreads and higher volatility that you see in markets like rhodium and things like that have a similar lack of real price discovery. Yeah, so yeah, not a lot of counterparty diversity basically. So yeah, yeah, we have got interesting things. But then you could say, you could then look, if you were gonna give central banks the credit, which I don't think you really can, that well, it's not actually central banks that are saying this anyway, but you could say that they are trying to deleverage gold. They are basically trying to deleverage the paper gold that is in the system. Yeah, because obviously banks then will either basically have to convert that paper gold into real gold, or just basically just scrap the whole gold position, which is going to be the most likely scenario. So yeah, they could be trying to deleverage gold. Why would they want to deleverage gold? Because they can see an impending bust, and they know that they're going to need something to try and stabilize whatever results whatever the resulting situation is on the opposite side. And if you do have obviously the gold market going wild also because of the massive leverage there and the paper obligations and things, then yeah, we could have problems. They could have problems just having any sort of a system, because obviously ultimately the go-to with a collapse of the system would be gold. Obviously we operate in cryptocurrency, but central banks, they don't really hold or use cryptocurrency, but they do hold and use gold. So that would be their go-to. Cryptocurrency may end up being the de facto currency that more people will use due to it maybe just will be better to use than whatever emerges on the opposite side. But like I said, that won't be the preferred option for central banks. So they maybe are trying to prime gold here with these Basel III requirements to basically just to be an option when the SH1T hits the fan. But anyway, let's have a look at Ethereum BTC. Still hanging around this area, looking to try and not come any lower. So yeah, I mean, we've got to keep an eye on this, because this just break down lower, then yeah, we are going to be looking at pretty lower levels, and we could then be looking at the end of this bull run in this Satoshi pairing. So yeah, important point here, important level we're at. Again, you can see here also in the dollar pairing at the bottom of the range, similarly as Bitcoin is, well, Bitcoin's actually only halfway down, but obviously this is coming lower on the basis that the this ratio is coming lower. But yeah, we need to kind of hold this level. So Ethereum does need to do some work. There are obviously bullish things coming in for Ethereum, but hey, if markets are going to start getting hit, then obviously altcoins are definitely going to start to underperform Bitcoin. And yeah, and then obviously look weaker. The Bitcoin dominance as well, well, is hanging in up in there. But yeah, like I said, we've got to take this out to come lower. And if we do take this horizontal out, then yeah, I mean, realistically, we're heading for this downward sloping trend line as a minimum. We did look at this. This has obviously been closed. We did look at this yesterday, so not much to see there. So we will now go and have a quick look at those stochastics. See how they are doing. Can they help us hold this level? I mean, 4 hour is deep, but it is turning back down again, so that is obviously not looking good. But it could obviously start to help us if we do get, like, say, above 36,000. 10 hour looking to turn back up from a very deep levels not seen since, well, basically December last year. So pretty much December last year. Yeah, these just miss it. So very deep in the 10 hour, so we could obviously, that is obviously likely to turn up and give us some sort of a potential upward bias. 12 hour still diving, but obviously if the 10 hour feeds through, it will help us. Daily coming down, 2 day was coming up but looking to turn back over, 3 day turning back over from a low point. So I mean, basically what we have going on here, the stochastic read is that it is obviously bearish, but it can turn back up and give us a nice move up. It's just a case of where is that move up from, because like I said, we have got downward momentum now. So if we do basically get above 36, then this will start to look good for those especially 10 and 12 hour to get going, to get us moving back towards the top of the range. Or like I said, they are bearishly postured, they get us down to 33k, and then we do turn up and get a nice bounce from there, which I think, I mean this is just complete pointless crystal ball predictions, but I think that may be what would be happening. I think we maybe are going to come down to $33,000 area, get supported, come back up. Maybe it's just a wick basis, maybe we do come down and it's more of a rounded bottom, but I think we will do that, then get back above the midpoint, and then well, pretty much make an attempt on towards the $40,000 level, retreat off. I mean, let's just run with it, retreat off that level, maybe get down to about 38, turn back up, and then we have potentially got a chance to take it out to the upside. So obviously that would be basically happening with a retreat back down in the dollar. So that is my crystal ball scenario. Make of that what you will, but either way, in the short term, we are basically looking for either we're going to move up from here, or we're going to come down to 33. And we will be awaiting to see how the market has thought about, had a long hard think about what the Fed is saying. It's one thing to, obviously they have to think about what the Fed is saying, and then they have to think about whether they believe the BS that the Fed talks about, because they are literally so far off the plantation now, with the stuff they're saying, their views on interest rates, their predictions of where the inflation for like this whole year. They are literally just absolutely talking absolute rubbish, and it is as clear as day for anybody to see. So what the point of that is that, I mean, they can to a certain extent say what they want, and the market is shouldn't listen. They shouldn't listen, because they are so obviously talking rubbish. So but anyway, so yeah, there we go. A little bit of a rant for this Sunday. But yeah, thank you for listening, guys. Remember, this is not a financial advice. I'm not a financial advisor. Always do your own research, and I shall speak to you guys soon.